I feel like Jensen Huang was trying to give the trifecta, a positive picture on demand, positive picture on supply, and he even had the opportunity to kind of throw a bit of shade at ASICs or Google TPUs, saying that customers looked at alternatives and they came back to Nvidia. There was a lot there. What is the most important data point to you?
Hi, Ed. Good to see you. Perhaps maybe the most important one was that Jensen wasn't wearing his signature leather jacket. But for the most part, for us, when you look at the financials and when you look at the growth rate that Nvidia has posted and really delivering beyond expectations for where consensus estimates were, that was the most important metrics for us as we listened to the call.
What I tried to do at the beginning of the conversation was get a sense of how supply constrained they are and how conservative that $500 billion forecast through the end of next year is. Let's start there. Listen to this.
Sales are off the charts for Blackwell, and Nvidia GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong.
Is that $500 billion figure, which excludes China and is Blackwell Rubin through the end of calendar 26, a bit conservative?
Well, we heard analysts ask that question, right? And they have visibility into that $500 billion number. And so that doesn't include sort of the demand that will be coming forward in the next 14 to 18 months. And so it perhaps is conservative. And I think that's the part that's so difficult for all of us to really wrap our heads around. These numbers are so large and they're growing at such a rate that we haven't seen before, that it really becomes, for most of us, we're all skeptical that this is going to happen at the rate that it continues to happen at.
What was interesting was the depreciation question was tackled. This is what's got Michael Burry in a tizzy. It's got what many have been seeing as a little bit of anxiety, that ultimately the consumers of Nvidia chips have been saying, look, these last longer than some had anticipated. But really, it was made clear that the A100s, the older type of chips, are still working 6 years on, Ayako. Did that put that anxiety to bed?
Yeah, I think it was a great way for Colette to sort of clap back at that depreciation argument. We are still using these older chips. They are still getting consumed simply because the demand is so great. So I do think there was a little bit of that was put to rest, and a relief, I think, from investors to a certain extent that they were still being utilized to that extent.
There's a relief today, and we are up 2 percentage points, Ayako. But I feel as though the entire market is a bit of an anxious boyfriend at the moment, trying to have soothing words currently given to it from whomever they can class as their AI girlfriend in many ways. But what are you thinking of in terms of that this will soothe for the longer term? Are we going to need weekly updates that we're not in some sort of bubble?
It is really difficult to sort of wrap our heads around. I think on one hand, we do see all of the demand continuing to grow at these exponential rates. But on the other hand, you see all this circularity and financing that I think concerns all of us. And then all of us who kind of grew up during the sort of tech bubble era, we've kind of seen this movie before, and we don't want it to end the way that it ended back in 2000. And so there's a lot of push and pull and a lot of monitoring on a daily, weekly, quarterly basis. And I think that's why Nvidia's earnings calls continue to be sort of the Super Bowl of, equity investors, calendars.
What about Nvidia's valuation specifically? Do you feel comfortable with that?
It's trading at 28 times next year's numbers. It's growing revenue at 60%. It's growing earnings at 50+%. They're reasonable valuations. They are not astronomical like we saw during the tech bubble. However, it's still relatively expensive, and it all hinges upon the duration of this growth rate. Does this continue at these levels for 3-5 years? Or is it just this sort of near-term 12-month growth rate that we're seeing? And I think that's this anxious investor base that's sort of watching this. When does the growth rate start to deteriorate?
Well, according to Bloomberg analysis, if you're looking at what the general consensus is, by 2028, revenue growth is going to have slowed to 26%. Just in 2027, it will have slowed to 45%. But is that just the law of ever greater numbers? I mean, we're already almost a $5 trillion company. How can we expect it to keep growing at 60% out into 2028 and above?
And I think that's the thing, that's the skepticism that really sort of creeps into, the investor mindset, is that how large can this get? And the numbers, when you start to just grow at 60% plus year after year, it's just astronomical. And yet, Jensen's talking about $3 to $4 trillion of annual spend for data center and AI infrastructure. And if all of that or a good portion of that goes to Nvidia, the numbers continue to grow. And then, the hyperscalers will grow as well because that benefits their cloud revenue. So it's just something that we continue to keep monitoring, and we'll have to see each quarter, not just from Nvidia, but from all of the tech ecosystem in terms of how large this AI platform is going to become.